Good morning, it's Monday the 22nd of May. This is the Phoenix Blue update brought to you this morning by Tom Colley. Last week was dominated by US politics. We had talk of potential impeachment for President Trump following the sacking of the director of the FBI, the fact that he may have previously asked him to drop any investigation into Trump's campaign or connections with Russia during the election campaign. So a lot going on there. We saw that news break in the middle of the week. It gave the markets a jolt. The dollar fell. Technical levels, cut extremes were ignored. As we expect when those circumstances occur. We can't predict those circumstances. That is just one of the risks that we accept in trading, that our trades are sometimes not successful because of unforeseeable events, and that's exactly what we had last week. Going into this week, there remains a big risk in the same area. Trump is out of the country, he's in the Middle East. That could be a good thing in terms of it could let things settle down. Alternatively, if things blow up again, he and his staff are remote, so it could actually cause more volatility. So going into this week, we are looking somewhat for the markets to settle after last week. There's very little news, as you'll see here, for this, or there's no news today at all. We've got the ongoing Euro group meetings, but they don't normally directly affect the charts. We've got the bank holiday in Canada, so we can, unless some news breaks out, we can expect a quiet day. Technical levels being held, and maybe some sort of sorting out to how the markets have seen things over the weekend. There were some more revelations that came out in the Washington Post over the weekend, which potentially could have had a more dramatic effect. There was a risk of large gaps at the open because of that, but that again appears to have quietened down. So although we have a plan for the week ahead, we shan't be rushing into it, potentially looking in most markets forward to tomorrow before placing some of those trades. Just looking at the news back to last week, we had poor numbers out on retail and CPI for the Canadian dollar. However, when we look at the chart, we'll see the Canadian dollar strengthened despite that, but that was predominantly as crude rallied through the $50 level on Friday afternoon. Over to the charts themselves, start with the dollar index, and we're having a weekly here. We've said this a number of times. Clearly, we've broken this upward trend line here. We've had a break, price has retested that trend line, and then last week we've had a very, very bearish bar, quite possibly the most bearish bar since this period through here mid last year. We have broken out of a falling wedge. Potential for a pullback here before coming short again, but in the short to medium term, our bias on the dollar is bearish. We still have a long-term view which is bullish the dollar based on interest rates. And the market is still anticipating that good data in the States will lead to a rate rise in the June FOMC meeting. We have the minutes of the FOMC meeting on Wednesday night, the previous meeting, and traders will be searching that for indication of evidence of those hike or that hike in June. Now you might think, well, why is the dollar selling off? Even though we are seeing strong numbers, particularly in employment out of the US. Well, the reason is Donald Trump, the promises he made, and the way the market is perceiving his administration, his ability to bring those policies to fruition. We can see we've now taken out, in terms of closers, the weekly bar of the week of the election itself. We had a really strong bullish move through here to the end of the year on what's become known as the Trump trade or the Trump rally. Clearly, the euphoria, if that's what we could call it, it has gone now. We're back at levels we were prior to that Trump bounce or that Trump rally, whatever we want to call it. I think we've really levels at $96 and $95 are realistic over the next few weeks. And we will be looking to trade with that in mind, unless we get a break above this 98.50 level, which would move us back into a shorter term bullish stance on the dollar. But as I say, we don't anticipate that. We are expecting more downside, certainly until we get closer to that June FOMC potential rate rise. Over on the yen, well, on this chart, we were bullish on the chart. Dollar strength last week. We'd broken a trend line or a channel through here, cleanly broken it. We were looking for a pullback to retest that channel. Price simply sailed through on Wednesday as the dollar fell, as the news broke on the US politics side. Clearly, you can see I've got a couple of levels marked here. Like with the dollar index, we're looking for a pullback potentially to around this 112.75 level before further short side targeting the April lows through here. Again, though, we will potentially be looking for some sort of indication. You can see this morning we gapped down, the gap's been closed, and the current position is bullish over last week. Obviously, that's not a closed bar, so we can't make proper judgments on that. But clearly, there's a little bit of a bounce there over the weekend. This is the euro. We had again a huge bullish run up to 1.12, where we're sitting at the moment. The level here at around 1.1 was a good level of resistance. We had a COT extreme signal, which we still have. That was ignored with the through the news from the US, and we're now back at the 1.12 level, which is our next significant level, where we again start to consider we've got a COT extreme signal. Having said that, the big news last week happened on Wednesday. The data that the latest COT signal relates to was taken Tuesday, so there is potential for this position to have been revised on the next week's forthcoming data, when the commercial entities in the futures market can be, or their reaction to that Wednesday and the break of that level there can be seen. So in this market, again, we're looking for a pullback. 1.1030 is a favoured level through here, or 1.1 something in that area, to take this market further to the long side, looking for the 1.14s up here. If we don't get that pullback, or we only get an intraday pullback, we will be looking for a BPR trade of this 1.12 level here. Over on the pound, well, the pound was relatively resilient to the falling dollar, in that there wasn't a lot of upward pressure. If we look at the other markets that moved relative to the dollar move, we would have expected a stronger move on the pound. The pound obviously has its own issues, the election, Brexit, etc., etc. Again, we have a COT extreme here. Our next key level is 1.31. So we're looking for intraday and smaller moves within this market. Today I'm looking for a pullback to around that 1.287 level, or the bottom of the channel, about 1.29, targeting the top of the channel and 131. I want to see 131 broken before setting bigger targets when we've got this 13440 level through here that you can clear. You can clearly see these are significant levels. This is the night of the Brexit vote. We then had a period of consolidation through here with some levels being nicely respected. Prices coming back to these two levels, and if price does break above that 1.31, we'll be looking for those levels to be respected. Conversely, obviously, if we get a break to the downside, we'll be looking to wait for a pullback to this same 1.287 level through here. Over on the Aussie, nice level here at about 0.749, obviously 0.75 just above it. Some nice confluence through there, including the neckline of this big double top through here. We have a falling trend line and an upward trend line, a triangle formation or pattern potentially developing. So we're looking from trades from the short side here, but we will only be targeting the rising trend line in the first instance. Again, we have a cut extreme signal on the Aussie at this level that is already a level that's already been respected recently. So we'll be looking for relatively cautious targets, which is the same across all markets, as you can probably gather from what I'm saying. But that 0.7490 was a level we were watching all last week. Price has been bullish in the light of the dollar weakness, not as much as obviously the euro and latterly the yen. The Kiwi, on the other hand, that has we saw a bullish move through last week, but there's clearly a level here at about 6.940, 6.950, the top of this box range that I've got marked here. We've got a cut extreme signal at the lows here. And I'm looking for a break above this 69.40.50 level. That would be a breakout of this falling wedge, giving me some further confluence. Looking for a close above, maybe even a second close above before a pullback to that level to take it to the long side. Potentially targeting 7,100 or 0,700 through here. So some nice possibilities in that market as and when we get a break. But you can see we've had a number of certainly intraday false breaks out of this, so I will be looking for a clear break before the pullback, with my eye obviously always on the dollar at the moment, and accepting that in order to place any trades whilst we're in this period at the moment with the US political news, there is potentially a higher degree of risk than normal. You might like to reduce your risk on those trades. You might like to sit out of the market, but in either event, you need to accept the risk that you place on the table at the point you do it. Be willing to lose that money, or don't enter the trade or reduce it to a level that you are comfortable with. Over on the Canadian dollar, well, the Canadian dollar really would not strengthen last week, and the latter part of last week certainly into that dollar weakness. On Thursday it was sitting about this 1.36 level, and we can see a lot of indecision to significant doji bars there. And Friday we finally got a push through there, which was driven to a great extent, I believe, by a bullish move in crude oil. A lot going on in crude at the moment. We've got an OPEC meeting this week, which potentially gives us further long side potential in crude and short on this chart with Canadian dollar strengthening. Through this week, I'm looking for pullbacks into this level, particularly interested in this 1.36 level. On an intraday basis, there's another level through here, through these previous highs here, that was respected by the tips there. Dependent on what happens here, we'll be looking for a pullback to one of those levels, targeting the bottom of this channel here, and then also around this 3.3385, looking for long trades from there for the channel to be respected. Alternatively, obviously, if that's not the case, we'll simply change our position, wait for the break below before pullback to take it lower, having broken that channel. There is a longer term trend line through here, which, if price breaks that level, this 3285 level becomes significant, and we'd look for confluence with that longer term trend line through that, but only once we've seen a break of this rising channel here.